Good day, everyone. We see a market that's finally starting a possible correction. Major averages are only still off about a couple percent. And this is December, which tends to be a pretty tame month since 2009 anyway, where QE tends to find its floor very quickly. So the question is, with the S&P only it's just a couple of percent away from its 50-day, if it's going to act like a magnet and come down to the 2000 level, or if it's going to find its footing sooner. Right now, we've got a lot of signs that show distribution on the S&P. We have leading stocks that have acted very weakly in this bounce, and at the same time, we have the headwinds of lower oil, which is making investors quite skittish, and because oil has plummeted about 45% in the last just several weeks. But globally, that's good. That actually can serve as an additional spigot of QE, so to speak, because it makes things quite a bit cheaper and helps for economies globally, which have been very weak, despite the Fed's attempts to jump-start it with all this money that they've been printing. We have central banks around the world joining in unison, and the Fed has probably got QE4 at the ready, but it hasn't mentioned any formal QE, and so there is technically no safety net under the U.S. market right now. But rest assured, if the market starts to really correct here, and we start going into like a situation like October where averages come off 10%, the Fed will probably step in and talk about the possibilities of, of course, keeping rates low, and then how to do that. And the way they will do that most likely is some form of QE called QE4. At the meantime, we are in cash based on market direction. MDM is in cash because the market, like I said, it could bounce, it could find its floor in here, or it could go lower. So it's better to be on the sidelines when we're in this kind of uncertainty. What is more certain, however, are the actions of stocks. On this run-up, we've had a number of stocks that have been good short sale setups, and with this recent small correction we've had, that certainly has helped those sorts of positions. So we're going to just remain on the quiet in terms of market direction, but the MDM will be ready to switch to either a buy or a sell depending on how the buying and selling pressure works out. Gil?
Yeah, the basic idea here is, we saw this coming. We've been talking about the short side for a while now. It's nothing new. And I think if a lot of people are coming in here, all of a sudden you want to get heavy short, you're a little bit late in terms of the timing. I think you have to anticipate a little better and react less. And I know people like to, once something starts coming down, everybody wants to get shorted, like get an email from somebody on Tesla, are there any other entry points in the stock aside from, using resistance or the moving averages? And it's kind of a silly question because it's not like we got some secret bag of entry points, mid-air entry points on the short side. The bottom line is we were talking about this thing up here and around 250, just underneath along the 50-day moving average, and I think you can go back to the webinar of a couple of weeks ago where, this is where you're getting short. Now you're all the way down here. Anything could happen here. And I wouldn't be surprised, you see the retest, say, on Tesla here, I wouldn't be surprised to see a little rally. It could take you up closer to 220. Maybe it's shortable there, and you come after it. But you can see it retested the low, and it turned, and it's trying to rally. So if you're holding a core position, I'm holding a core position in it right now. I'm just letting it do its thing because I'm in short at 259, so I'm just going to hang there and see what happens. And I think so far that's been well rewarded. You could get a little blip back up to 220, but I think overall, Tesla is it's a topper. Now you got this sort of head and shoulders here. You can see it. You broke through the neckline, so the neckline's up around 220. That's why I think that's probably a decent near-term resistance level. So watching for that. And could come back in real heavy on the stock on a rally up in there, I think, if you wanted to, and we'll see where it goes. Probably the big bust comes on earnings. I don't think they're selling that many cars these days, not as many as they used to. And so, we talked about this when the stock was 40 points higher. So you're either there or you're not. And if you're trying to come in now, maybe it just goes lower from here. Maybe it rallies and squeezes you. But up to 220 would be a 5% rally from where you're at now. And what I think they're doing with the index is, if you look at the NASDAQ, you could see that started getting into trouble back here the day after Thanksgiving, because that was actually decent volume, about a half day's worth. So I think it was actually more than Wednesday or Tuesday on an adjusted basis. But of course, that's still just speculation. But that's what I think. And so that's a churning day to me. And then you break on next Monday on heavier volume, and that's a distribution day. Now you're rallying up, and notice you churn here on this day right here, and the volume's picking up slightly. The next day you churn some more after gapping up, and the volume picks up slightly again here. And then you pick up heavy volume on Monday of this week, and you come off. Then you get a bizarre reversal, and you come off again on lighter volume. And then yesterday we had the gap up, and then the reversal going into the end of the day. And I think it tells you that a lot of this market is somewhat subject to bizarre volatility and manipulation. So you have to be on the lookout for that sort of thing. And I think that's kind of the hallmark of a QE market. And in that case, you're either working with core positions short and getting in at the right spot, but if you're just reacting late, you're putting yourself in a bad position, and I don't really advocate that. But it is interesting how everybody comes out of the woodwork, and now everybody wants to short Tesla. It's like, okay, not like we weren't on this a lot earlier, and it's somewhat silly to be asking us if there's some magic short sale points that we know of here that are going to produce surefire profits. So this morning, I think they gapped the market down, and I think they hit a bunch of buy stops, undercutting the lows of this past Tuesday rather. And this level here, this little flag area, consolidation of about a week, and so they're able to bounce it off here. Now we'll see where it goes. I think we're headed lower, and I think we're going to test the 50-day on the S&P. So we'll see if I'm right. All I know is that I've exceeded triple digits for the year, performance-wise. So that was my primary objective, just to get that done. Now let's hope I don't screw it up going into the last. I think we got 13, 14 trading days left. Dr. K, is that it? And so that's where my focus is right now, is just kind of maintaining my performance and trying to capitalize on a nice break if we get it here. And so far we have. I have to say it's been very nice run here on the short side. On Tuesday, it was interesting that we did get the rally on Tuesday off the lows, this rally here, that it looked pretty good actually. You had some stocks, Tesla coming down in here, undercutting these lows that I was using for my prior price targets. Also undercut this low in the handle. This is the handle low in the cup with handle. You see that? It's about 113, or I'm sorry, 213 and change. I keep referring to Tesla's price as being in the hundreds, and I think that's more wishful thinking than anything, because I think it's eventually headed there, and it's headed for the low of the cup here, which you can see it would be right here. The low here is 177.22. That's what I think, but it may not happen right away. It may take some time to transpire, and it may not occur until earnings. It may just sputter around in here. But if you went short around the 50-day or just above around 240, I think when we first started talking about this, Dr. It was like 251, 252, wasn't it?
Yeah, I was up in that zone.
Yeah, and so that's 20% of downside. And so around, here I'm willing to hold a core position and let it shake around a little bit, and if it rallies on me, I'll get aggressive and hit it again. But I just think this thing's headed lower. And Dr. K, you've been pretty dead on too in terms of your assessment as well. And so the two of us have been on top of this one from the start. And if you weren't short up here and now you want to get short here, forget it. But it did undercut on Tuesday. We also saw Netflix undercut this low on Tuesday. You see that? You can see that pretty clearly. You see the undercut. And that leads to a natural undercut and rally, but they're very weak rallies. Now it's retesting the low. And my guess is it's still headed lower. It's headed probably for this low on this big pod with handle. And you see how this takes time to break down. You don't just get the pod and then it busts, and a lot of that has to do with the market. You're seeing the Dow down 123 now. Nasdaq's down 15. So things are just getting going, I think, on the downside, at least in the short term over the next few days. My probable scenario, Dr. K, I was hoping to get some feedback from you on this, is that maybe you sell off over the next 3 days into the Fed meeting, and then I think everybody's expecting the Fed to raise interest rates. But I think what you're seeing is deflationary sort of environment, and I think the oil prices are presaging a global economic slowdown of maybe proportions or magnitude that most people aren't expecting. And so what happens is you sell off here for 2 or 3 days as everybody adjusts to the situation, and then the Fed comes in and soft pedals on the language, and you get a bounce going into the end of the year and the final few days of trading in 2014. Do you think that's a possibility, Dr. K?
Well, the Fed's going to be dovish as always, and the market will respond in kind. I mean, the Fed's going to, of course, keep interest rates low, and that language hasn't changed. They know that some of these economic statistics are a bit funny, the way they're calculated, and therefore, with the global economy weak, the U.S. economy is no different, and they have to keep rates low. So they're going to, at some point, have to join in unison with the other central banks and create a QE4 of some sort. I think the market is forward-looking for that, and therefore, I think the correction that we have right now, that the market undergoes, is probably going to be a short-lived correction, simply because the Fed doesn't want to undo what it's taken, the last 5 years to do in terms of this manufactured bull market. Wants to keep stocks alive and wants to keep the uptrend intact, and wants to do everything it can to give the economy a fighting chance. And I think all the global markets are on board. So I think the long-term uptrend is still intact, given the fundamental backdrop. And right now, the market could go lower very easily because of some of these factors. But it could also just as easily find its footing and go higher. That's why it's better in an uncertain environment like this to be in cash, take your profits from the last signal, and keep your powder dry. Wait for the next sign, whether that's buy or sell. But my thinking is that the next signal is probably going to be more likely a buy signal. Any selling that goes on the averages will probably be short-lived. Therefore, that would be a very tricky sell signal. It would have to be probably a 1 or 2 day sell signal if we did get that at all. So again, it's tough to sometimes get cute with the market, especially with the averages in this QE environment. So it's better to be in cash and await the next signal.
But don't you think that assuming that no matter if the Fed comes in, they're just going to keep propping the markets ad infinitum and they're never going to stop going up, that strikes me as a little bit simplistic and kind of playing with the market or getting cute with the market, because you're trying to predict what may or may not happen rather than going by the clear action of leading stocks, many of which are just getting pummeled, and just deciding that, oh, well, everything's going to be fine when we'll never go to a sell signal. Don't you think at some point there could very easily be a valid sell signal here? Or are you just discounting that as an impossibility?
I think, well, obviously there's going to be a time when there will be a legitimate sell signal because the Fed can't do this forever. But one thing it can do is not to fight the Fed, and that is it can make the markets go a lot longer than anyone ever expects. And this is true in all the
They have.
They already have it. In other words, calling a top is very dangerous, and as a lot of short sellers know.
But I think sitting there, well, I guess if you're in cash, you're okay. But I think sitting there long on that assumption.
Late 90s were treacherous, for short sellers, because Greenspan validated that the markets were too high in 1997.
Yeah.
And so remember, and same thing's happening today. It's been happening since 2009. Is that the markets need to sell off? But here we are in 2014, and the markets are a hell of a lot higher. And which goes to show the power of the central banks.
Well, the markets are up 12% for the year. The Nasdaq's up 12.4% for the year, I think. So it really hasn't been a stellar year for the market. It's been pretty flat. So, and being up over 100%, a lot of that has been achieved. I'm going to say at least half has been achieved on the short side, which is no surprise.
Yeah, which is the market is always. This is the kind of market environment where you have to be attentive to individual names, individual stocks.
Right.
Because you make a lot of money on the short side, or not so much on the long side. It has really not been a robust bull market at all this year.
No.
I'd say more of the profit has been on the short side, which is great because, in other words, there's always a way to skin the cat. As far as market timing, it's a bit challenging in a manufactured, manipulated environment like we've seen, but nevertheless, there are some good signals that the model's had under its belt. And right now, the model, the key is never to get biased, because the model has nothing to do with bias or personal opinions or what the Fed does. It has to do with the price volume action. Right now, it's kind of in no man's land, so it's better to be in cash. And as far as the buy signal, it seems like based on the last 5 years, the market will probably resume its uptrend sooner than later. And so the model would then switch to a buy. Now, there is, of course, every chance that the selling pressure will increase to where the model, say the S&P gets jacked down to the 50-day at 2000, then has a weak bounce. The model might elect to go to a sell signal at that point, which would be perfectly justified, and maybe we move into January, which turns out to be like a January 2008, where the market starts to begin a more roughshod sell-off. Because QE just is not working and the market starts to lose confidence. These are all factors that could weigh in.
Okay, well, my general view is we're heading lower from here, and I expect to continue to make money on the short side, as I have been. And yesterday was clearly, to me, the mother of all short sale opportunities on that big gap up. But it does show you how nutty the market is. The volatility here, I think, is indicative of sort of topping action, but there's still a lot of money out there sloshing around, which makes it, as we saw yesterday morning. I mean, if you were short, coming in short on Wednesday, and again, reacting rather than anticipating the market break on Wednesday, you got your head handed to you early in the morning yesterday, and if you've got cushion and some buying power, you come in and short the hell out of everything on the bounce yesterday, and that worked very well by the close. We'll see how things go today, but right now you're down. Is the volume up right now? It's 7:47 my time. What is it over there, like 8 o'clock or something? You're in Cape Town, right?
It's 5:47. Yeah, 5:47 p.m. 10 hours ahead of you.
Yeah, volume is up today.
I got the sense that, yeah, it is. So there's a lot of nervousness out there still, and I don't think, and that could be an indication that the sell-off is not over, because the VIX is now trying to approach new highs. In fact, it's right at almost at yesterday's closing level. So
let's see, any questions out there? I'm just going to run through some stocks based, what I've been looking at and shorting. I mean, we looked at some of the shorts. BABA came in on Tuesday, bounced off the 50-day moving average. It's not getting any real thrust off of there, though. I'd prefer to see some volume come in, and you're not seeing any of that off of the 50-day moving average, which for me is problematic, and I think that could be maybe it needs to build a longer base. That's what it looks like right now on the weekly chart, and it is kind of steep there. I can flatten it out a little bit, but it's still kind of steep, and there's no real tight areas on the weekly chart, so you can't say that this is necessarily viable. If you stepped in and bought this thing on Tuesday, and I actually bought some on Tuesday and got a couple of bucks out, I thought it was going to push higher, but it reversed, and I got blown out on trailing stop on that, and it's pushed back up, where I sold it, of course, just to tick me off, but that's the way that goes. And now it's just kind of sliding around. But I think I would watch the weekly chart here, because you need to see some tighter areas. It is getting some support off the lows on the pullbacks, and it is a big name. I think everyone's going to need to own it, show that they own it at the end of the year. That's why I'm thinking if we sell off here, you might go to like I was saying, the 50-day on the S&P, a little further on the NASDAQ. So one or the other, keep an eye on these indexes as they come in. Today the NASDAQ's down, but off its lows, whereas the S&P is near its lows, and I think that a lot of that is the oil concerns there getting whacked. Somebody's asking about eyes, not sure why. I don't know. This might be a low, maybe it isn't. Buy some and then tell us how you do. No idea here. It's just that's what it looks like on a weekly chart. IPO, and it's come all the way in, pretty much back. Didn't this thing come all the way back to its IPO price, Dr. K?
No, the IPO was $9, so
okay.
It never did. But certainly, right now in the chart, it would have to have it would have to quiet down and issue some sort of pocket pivot for me to get interested.
Yeah, and the people who bought this thing on the IPO day, they're all underwater. So I think there's overhead here. I'm not a buyer. You'd have to wait for this to set up. And I'd watch the weekly charts. You want to see the volume dry up so long as, say, the 10-day moving average. This thing's sitting on the 10-day, so I don't know. Could it have a pocket pivot? I suppose so. If that's what you want to buy into, but I wouldn't.
Too sloppy right now.
Yeah, it's too sloppy. I mean, you could get a trade off of this up to say 16, but after that, I don't know what happens. Any assessment
money and run if you're
not moving down as anticipated? I don't, what are you talking about? Not moving down as it moved down. This thing was short up here, and then you have a rally up to the 20-day. Then you have another rally up to the 20-day. Those are your short points. That's where you're getting short the stock, and then it breaks out through this bear flag, okay? And you get a rally up in the 10-day moving average and right to the bottom of the bear flag. It's sort of like if you flip it upside down and look at it in a mirror, it's like a breakout that is pulling back to the top of the base, and then you could have shorted it there, and now it's moved down. You undercut this low over here, which makes total sense that you're going to have an undercut and rally, and then a little blip to the upside. Now the thing's just goofing around, but as far as I'm concerned, this thing's headed lower. So number one, I think your language indicates that you're late to the party and you're anticipating it's going to move lower. It's not going to do it right away. If the market gets worse, it's probably going to go lower, so I would be patient. But if you're coming in short here, you're a little bit late to the party. Your short points were here, here, and here. Now the thing is down, and you're worried that it's not going down enough. But if you look at this thing, it's down 20% from the 20-day here. So it's had a nice breakdown, and I think like Tesla, you got to sit around and let it do its thing. Like for example, Tesla's bopping around. It was down around 204, 205 earlier, and then it runs back up to 210. But what is that? That's 2-3%. That's a little tiny move. I would expect it to find some support off these lows, but I don't think it's going to hold. So I'm using any bounces, like I said, to short into it, but it may just break from here, which is why I'm going to hold my core position here, taken at 259 and change. So, and I think it's going lower. I think Twitter's going lower as well eventually, but things don't happen right away, and if you sit there expecting them to, then you're not going to make any money. You got to go out on a few dates first before you can get to second base. Anyways. But, that's what's going on there. And let's look at this on the weekly chart. Again, we saw the failure here. So the place to get short was on the gap down or into the rallies into the 20-day, which you notice this one actually also carried into the 40-week line. And you have this big pod that you broke down from, and this thing just looks ugly. But you did undercut this low, so that sets you up in a position to hang out here for a little bit. And you may break sooner than later, and it wouldn't surprise me if we did. But oh, I got an alert catching on my rally here. There we go. Okay. Anyways, what do you mean by core position? It's what I'm going to hold on to, basically. It's no particular percentage size. A lot of it is a function of how much of a profit cushion I have on the stock and how much further downside, in case of having a short position, how much further downside I think there is from any given point. But since I'm in here on Tesla at, for example, 259 and change, I'm holding this thing, and I'll get heavy on the rallies. Yesterday was a great time to get real heavy, and it comes in, you can cover some of that, and then work the rally again. But I think it's heading lower, one way or another. And it may happen today. This gets a lot worse, and you just see the way that they're teasing everybody. They take the market down, then they start to rally it. I mean, this morning we went down 70, 80 points, and then they turn it, and we're only down 30 or something on the Dow, and so it looks like it's going to turn. And they've got everybody. I think they have the crowd conditioned to believe that you have to buy every pullback, and anytime the market comes in, you just buy it because it's always going to find its feet, so to speak. It may or may not. It may slip and slide for a little bit first, and I think the crowd is conditioned that way, and they work it beautifully, I think. Yesterday was a beautiful sucker rally. It was just so classic, and you could see it in the morning because I tweeted sometime around 9:30, just before midday, that this is turning into a big, the mother of all short selling opportunities. So, but again, here we go, what percent of each? So, yeah, I don't operate on the basis of what percent. If I think something's going down, I'm going to take a position, I'm going for it, So if you want to do recipe book investing, go I don't know, go to cooking school for investors, I guess. So you hold on to this and then trade around this. For the most part, I mean, there may be days when I cover the whole thing and then I try to short it back up another few points. I'm moving quickly, and I'm very fluid. And that's how I do 100% this year, being very fluid, taking the moves that you get, because you do get these beautiful moves both ways in this market throughout the year. As long as you maintain an open mind and don't have any particular bias, just watch what the stocks are doing, and they'll tell you what you need to do. It's not that hard. But percentages, some people can stomach 5% drawdowns in a couple of days. I can do it. Some people can't. And so if you think you can, I think someone, last night someone emailed me and they wanted to know how they could replicate my results. I just think the use of that word is hilarious because it seems to imply that you can just take what I'm doing and put it on a copying machine and print it out on the copy machine and just follow the recipe book and you're going to make tons of money. It doesn't work that way. You have to develop judgment by engaging in actual trading and gaining experience. So judgment gained by experience is what allows you to capitalize on particular market environments if you can figure it out. But I don't think a lot of people could do what I'm doing in this market. You know that, Dr. K. I'm pretty much a plunger, and I'll go in heavy where at the inflection point, the line of least resistance, and then take profits as the thing is moving. I'm not a position builder. I'm not into paint by the numbers investing. I'm not into recipe book investing. So someone says, but you hang on to your core position. I just said I might toss the whole thing and then try and short it again up higher on a rally. So, but there's no formula that I use, and I've tried to convey this many times that I don't believe that formulaic investing, or, as I said, painting by the numbers or investing by the numbers or recipe book investing is really going to work in all cases. And I think a lot of people who follow Can Slim are having a wonderful time getting their heads pounded in. You had mentioned.
Yeah, I mean, that's where experience comes in. Is you need to know when to break the rules. And we all know that Bill O'Neill certainly has his recipe book, but he also knows what makes him brilliant is he knows when to break those rules. And the experience that we've had over the last couple decades, actually last quarter century, has certainly helped us in terms of knowing when to switch gears or maybe take our existing strategy and start to tweak it or fine-tune it. And certainly the last few years has been an abnormal market, so it's been a necessity to take what we are normally accustomed to doing and tweak it fairly heavily in some cases.
Yeah. And I think when I watch Bill O'Neill trade, and you probably sense this as well, Dr. K, it's a guy, he used his judgment. And his judgment had been developed over the years by just seeing how the market acts in different environments and getting a sense of what the tape is telling you. And you can just start reading Reminiscences of a Stock Operator again, in the first chapter where he talks about where he's working as a board boy. I think he's at Payne Weber. That's one thing I share in common with Jesse Livermore is that we both worked at Payne Weber. And he talks about how just the fact that he was a board boy writing down the prices, there would be a customer sitting at the ticker tape calling out the prices, and he would put them up in chalk on the board. And he began to notice that there were certain patterns that would develop, that stocks would act certain ways before they began a price move. And so he began to invest in the bucket shops using his techniques or his ability to read the tape. But that's how he learned to understand what was going on in the market. He recognized patterns in real time, and he sort of inadvertently fell into that by being the board boy responsible for writing down the prices. So when you're sitting there writing down every price of a stock, you do get a pretty good sense, even without a chart or a quote, these beautiful multicolored quote monitors that we have, you get a sense of what the stock is doing, and it's no different today. And Livermore shot himself. They say one reason he was manic depressive, and that the other reason is that he was having trouble with the markets. They had all changed. But in reality, I don't think they ever really did. I do think he probably got locked into a particular frame of mind or frame of reference that he couldn't shake himself out of. And so I think that remains a problem for most investors in an environment like this, because it's just really weird and just way, way different. Let's see. Somebody is asking, you had mentioned on Twitter. Go ahead, Dr. K. Go ahead.
Yeah, a lot of people have given up. They've just dropped out. It's changed the trading atmosphere because a lot of people that were there aren't anymore. If you look back over the last decade, the market changed in 2004 to 2007, and then it changed again in 2008, and 2009, and onward. We're QE markets, so the market really hasn't been the same. By the same, I mean the 1980s and 1990s environment. The only year we've had that was reminiscent of those two decades was 2003, which was a pretty easy year to make a lot of money.
Yeah,
but outside of that, there hasn't been. I can tell you there's been late 2006, August, September, October 2006. That was reminiscent of the 80s and 90s, and that's where I more than doubled my account in 3 months. It was great. It was shooting puppies in a barrel kind of thing. But outside of that small blip, there really hasn't been that kind of market-friendly, Can-Slim-friendly environment. And of course, what doesn't kill you makes you stronger. And this is that kind of a market environment where metaphorically speaking, a lot of people have been killed and dropped out. When are we going to get old markets back? Who knows? Who knows? But if we do get them back, we'll see it when it happens. In the meantime, we create a set of tools that will help us to outperform in the current environment, and that's of course the mark of experience and a good trader. And this market is a great learning tool. This kind of market environment. So hopefully all of our members are utilizing this challenging environment to their maximum advantage.
Yeah, hopefully they're getting something out of these webinars in real time, because we've gone through so many ideas that have worked so well on the short side recently. Long side, you get some decent trades out of some of these moves, like for example Alexion. We picked up the Bible gap up. You got a nice move there. It's like 15% in this stock. I think you take something like that. Fails on the breakout here. This might be a short. I'm watching some of the biotechs here. Gilead is hanging along the 50-day, but if it breaks below on volume, it tried to go lower today, but it's holding. This might become a short again. You can start to see the head and shoulders forming. You see the stalling week here on the weekly chart. So you're starting to see that. Whoops. What happened here? Pulled up something I didn't want to. Yeah, you're starting to see that form, and I think it's setting up. That might be one to look at on the short side. You're using the highs here, probably 106.90, 107 up there as a quick stop. Market's blessed into the downside. See, there goes Tesla again, 107.89 on the bid. Twitter, they run it all the way up to 36.80, and now it's 36.38. All I do is short into that rally. It's like, thank you, thank you, thank you. Just keep hitting it. 36.80, fine. Here, you can have 2,500 shares. 36.82, you can have another 2,500 shares. And I just give it to them on these rallies. Same thing, another one I'm shorting this morning into this rally is LinkedIn. And I think this sort of reminds, okay, this is a pod, okay, and then you got this weird looking V-shaped cup with handle where you come straight up off the lows. To me, that's a sort of a late stage base, and it's starting to fail here because it's dropped below the 20-day. That's my first reference point, the green line here. Now you rally back up into the 20-day line, that's where I'm going to short it. And I'll use the highs here, maybe 220, what's the high there, 220.75. You probably go a little higher than that because 1% is 2 points. But to me, that's a short on that basis. So this is failing, and the first sign it fails is it drops below the 20-day. And if that's below the breakout point, even better. And then as it comes down, you see how it dips below the 50-day, but gets support just to fake everyone out, and fills this gap down here. And then you rally into the 20-day. That's your short point on the late-stage failed base, and that's what this looks like to me. That's why I'm hitting it here today on this rally. I'm very happy to have this rally to short into. Just keep giving it to them. When the ducks are quacking, feed the ducks. Let's see. Somebody says, just try and understand what you do. Well, you can't really understand what I do. You have to gain an understanding of the market and then understand what you do and then develop your own ways of handling the market. I think trading is a very personal affair. Like I said, it's not like there's some special handbook out there that you can use and everybody can use the same handbook and you're all going to make big money. It's going to be really easy. You won't have to sit through any difficult times. Everything will just move in the right direction for you, and it's all magic money. I think IBD feeds that myth, and I think it's a complete myth. And also the idea that one size fits all for everybody, I don't think that necessarily works. I think everybody is a unique individual, and I think that you have to develop your own trading style, and you learn how to do it over time. So you can only learn by doing. And I'm sure Dr. K would agree with me in that our objective is simply to help you get there faster, if we can, and part of that includes, cluing you guys into things that we've screwed up on in the past. I know I paid a lot of tuition. I'm sure you have too, Dr. K, over the years, and hopefully keep you from doing the same thing. Somebody says, you're given my first successful short ever. Splunk, Twitter, Data, Workday. Yeah, all those, the Workday, Twitter, Data, all of those are panning out. If you read my piece that I sent out, I think about 3 weeks ago, 4 weeks ago, maybe it was a month ago, is to watch how these things set up, because they look like these head and shoulder / pod things, okay? And as they start to break down, they become shortable. So we nailed this one right here around 87, 88 on our alert, and hopefully everybody started getting short there. Yesterday you had a rally right into the 200-day. I was in the chat room, and I pointed that out to everybody, and then kaboom, you're coming in. You're finding some support along the lows here around the 81 level, but I think it's probably going through and going to undercut this level if the general market keeps going. So Other than that, I don't see any clear downside price objective in between. So it should, unless you want to use this low, which is 79.25 here 4 days ago, and maybe that works. But this one looks like it's headed lower. And then you got Splunk. We've been talking about this one in the chat room. This is the day I first came after it, and I talked about this again. You got a pod, but you also have this big head and shoulders, and now you may be getting a fractal head and shoulders here. See this? This could become the head. You got the big stalling week at the peak on heavy volume right there, and then you break hard this week on heavy volume. That defines the right side of the head. Good night, Alice, or good night, Irene, actually. And we're heading lower, probably heading down for these lows. Near term, I'm using this low at 54. What is it? No, I'm sorry, 52.51 is a near term potential price target, but I'm also looking at this low under 50. I think at 49.61 is another potential spot to come in and short the stock here. I'm sorry, to cover on a pullback, looking for it to get there. So, sorry, I'm a little distracted, mainly because I'm running about 250% short right now. And I want to keep an eye on things. So, anyways, why haven't you been shorting oil stocks? That's a really good question. But you know, if you've been in the webinars, you know that we were shorting this one in here, right around the 50 level, because as I had surmised, and correctly, I might say, left shoulder, big head, right shoulder, goodbye. Goes to the neckline. I don't know where you probably draw the neckline along here, just because you can't. It's way too steep. And so that was an oil-related name that we shorted, and it's worked out really well. So we did. So day by day, much of what I have once considered insightful has become more obvious as I find myself viewing the names market very differently from a few years ago when I started following you. I hope that's good. I think that's yeah, I think that's you'll probably have a different view of the markets. And in my view, CanSlim is overused, and the methods are just too simplistic, and they don't really work that well anymore. And I think Dr. K came up with the pocket pivot and also defined the Bible gap up, which IBD still doesn't do in terms of how it's tradable. They talk about how you can buy gap ups in leading stocks sometimes, but they don't really tell you how to handle them. But Dr. K figured all that out, and in the mid 2000s, around what was that? 2004. When did you come up with the pocket pivot, Dr. K?
Well, formalized in 2005. 2004 was frustrating, and so I was at the drawing board looking for possibilities outside of base breakouts, because CanSlim wasn't. Well, CanSlim in all its variants, basically the way we traded in the 90s, wasn't working anymore. So by necessity, I had to come up with something. It's either that or just stop trading the markets altogether.
Right. And, we know pocket pivots are a very powerful tool in these markets. I've used them. I use early buy points. I also use the voodoo type buy points where I'm looking for volume drives on pullbacks to the 10-day, which is sort of a corollary to the pocket pivot, because a lot of pocket pivots will be preceded by exactly that sort of action. And so using the my HGS investor what do I call it? I forget what the chart's called, but using that chart view it helps me get into these things before they pocket pivot. So a little bit of an advantage can be gained there. Oh, let's see. Splunk, I want to get back to these because I was talking about these. Again, this is another one. Okay, and it's breaking now. So this looks like it's starting to become the right side of the head. And you're underneath the 200-day. I figured it would get there initially, and now it's getting into this area of congestion, so you're getting a little bit of support, but I think it's eventually going to break through. We'll see if I'm right. Could be wrong. Won't be the first time. But you're trying to get some support here, and volume's pretty heavy. I think it's probably going through, and I think it's heading. I'm looking for this low right now, so we'll see if we get there. Workday, I already talked about that. And what was the other one? Data, that's right. Data, then here you can see again the same pattern, same sort of pattern. It's the head and shoulders, but it rallies beyond the top of this right shoulder, which is not unusual. Now you're in a position here where you could be in a big pot and you're starting to fail. Notice how you're dropping below the 20-day today. You're still above the 50, so you could get a break to the 50-day, bounce off of there, and then you're trying to short it on a rally up into the 20-day moving average. That's a workable strategy, I think, with the stock. So I'm noticing that the names that I've been making a lot of money on the short side with are not really breaking all that much. I mean, Splunk and Workday have worked well recently, but today I think they're going after everything else. Secret weapon chart, that's what I have on HGSI. Why can't I remember that? I don't know. I'm just watching this market right now very closely, so bear with me if I seem distracted. Zyopharm, it's $4 stock. I'm not buying it. Got anything to say about this one?
I haven't heard of this one actually. Yeah, it's pretty thin. It's pretty cheap. It wouldn't be on my radar. I'm not really looking for stocks that are that cheap. So, you know, it's a biotech. It's going to be very volatile. It's going to have a lot of risk involved in this one. It's not earning revenues or, I mean, it's not earning. There's no earnings or sales on this thing.
No, so it's just another spec biotech, and they bought out Cubist, and there's another one that took off on some news. Blue and Biogen took off on some news. So they're jacking them all, and that's probably a little bit of speculative fever there in those names that probably needs to be corrected. Someone says, Dr. K, you're not aware of this because you're in South Africa right now, but London air traffic system having failure, shutting down air traffic. Cool. Is that responsible for the sell-off here? Maybe so. I don't know. But the Nasdaq starting to weaken. We've now moved lower into the range. When we first started the webinar, we were up higher. Let's see. What other name? Somebody wants me to talk about Taser. Taser, an amazing stock, and you should just keep buying it and sell your kids, your wife, and put it in. There's really nothing to think here. It's volatile, and you can only buy it on weakness, sitting at the 10-day. So where's your trailing stop? You know, if you bought it down in here on the Bible gap up, and you've held it since, or you bought it here on the pocket pivots, I think somewhere in here. Maybe there wasn't one here. Was this one? No. No other pocket pivots. But if you bought in here, or you bought pullbacks into the 10-day or the 20-day here, you're doing okay, so you just got to decide how much you're willing to give back if it starts to break. My view is if I had it here, what do you got, a 20% profit there? Is that not good enough? 25? I don't know. That's how I look at it. ONVO, what about it? Getting a bid. Yeah, right. Come on, that thing's such a piece of garbage. Why would you even bother with that? When people are looking at stocks like this here, I think in that position, when they're looking at these cheap little biotechs, like the Zyopharm, I remember my urologist when I was having surgery last year in August of last year, and he was talking about this one. The other one was Exxon, Intrexon rather, which I call Exxon, which has actually come up off the lows. But I think if you're looking at this and you're looking at you're on drugs. You're looking at the wrong stuff. You're not looking at the right stocks. And I don't really see them as viable. There's nothing really here. So how screwed is IBM? I don't know. I don't really pay attention to them. Pretty screwed. Looks like a bear flag breakout going lower. Ha! There you go. Signs of a global slowdown. It's coming. It's coming. Let's see. What else we got going on here? I mean, I don't see anything I want to buy on the long side. I notice Facebook doesn't want to give it up. And it's now, you know, this is a bear flag, and this is your prior failed breakout level. It's right back there. It's just like they're piling into it today. I don't know why. They love the stock. I don't. Let's see. What drugs do you recommend while trading? Let's see. You got any drugs while trading? Trading is a drug. So I'm not sure what you're talking about there.
It's like, what drugs do you take when you're trading? You know, I don't see. I mean, the biotechs have been doing very well. So, you know, obviously keep an eye out for them. We do, and we advise members when we do see something that's actionable.
Yes.
But right now, I mean, there's nothing today. You know, there haven't been any reports on these, but the sector in general is very strong. So I wouldn't be surprised to see more names come through and, you know, issue pocket pivots and whatnot.
I love this. Twitter is trying to rally back up. Let's take a look at this on the 620. I think this is interesting. You're trying to turn here, trying to come up, and you broke down. Yeah, actually broke down pretty hard. Now they're trying to bounce it back up. I'm not sure why, but I'm just holding my core position here. What else do we have? Anything else? For drugs, I prefer IPA. Not sure what that is. but if it works for you.
I don't think that's right. Well,
Is that a drug?
I think it's a drug, not a symbol.
Craziness. Stocks bouncing around. Market bouncing around here. We're down pretty good though. What's the Dow looking like?
167.
I gotta go to my S&P chart. Let's see what the... Come on now. Here we go. That's the S&P chart. Still moving lower. Let's go INDU. Dow heading for the 50. So you could watch any of these coming down into their 50-day moving average. I think that's probably where we could have a bounce, but just watch for that. Yeah, I think you could also go into a bear market. I think that's the last thing anybody's expecting. I think anything could happen here. I think the QE in general is being proven to not prove to provide any real meaningful economic stimulus. The Japanese are definitely finding that out the hard way, and Europe, same thing. And I think U.S. basically the same thing as well. The jobs number the other day was totally phonied up. It's so distorted, it's ridiculous. The seasonal adjustments are so far off the charts, it's almost nuts. There's like 200,000 jobs are added just by seasonal adjustments. What's wrong with this picture? And if you look at the actual raw numbers without making any adjustments, you do have a unemployment rate closer to 23%. It remains that way. So, ISIS getting jiggy. I don't know. I don't really trade that stock. It's up there, but so what? It's up there. What's your trailing stop? Who cares? Unless you have a need to talk about your stocks. Let's see. IPA equals beer equals India Pale Ale. I like that. I don't know. Vodka works pretty well for me. So I know some of you who were, I don't know, thanking us for some idea. I forget what. Maybe it was Cyber or Tesla or something. Want to send us vodka to the office? Go for it. Let's see. Down 180. Yeah, I think everything's eventually going to get dragged lower. So it's just a matter of sitting. I think so. Let's see. What else? Any other questions here? I'm ready to bag it here. I think the market's doing what it's doing, and short side is where I want to be. But it's been the place where you've wanted to be for the past 2 to 3 weeks in some of these names. Twitter, Tesla, Workday more recently. Let's see. No other questions, really. What is on your short sale watch list? Stocks, mostly. I'm not going through my short sale watch list. I mean, there's so many. Just look for stock. You know, every leader that's broken down from names like Gilead, Workday, Splunk, Twitter, Tesla, watching LinkedIn here. Let's see. Netflix has been on there. CRM, Salesforce, Solar City has been there for a while. Data, Silica's still on there, and it continues to move lower. I covered it too soon, though. Oh well, that's a terrible problem to have, I suppose. But anyways, just all these things are down, and that proves my point that you had to be shorting a while ago, and you want to anticipate the short side rather than reacting to it. And so, you know, at this phase, if you can find something in position, like I've just shown you LinkedIn, I think that's in position. Although, the other thing to think about is that it's up in a down tape, so either it's going to give way or it's going to hold up. I don't know really what will happen here. And then Twitter is up, but like I said, Twitter is already down a long way, so it's entitled to a little bit of jiggling around here. I just, you know, hang on to a core I'm using. If I got any big rally, like I said, up to the highs of 1210, which is 37.78, that probably would be where I'd want to come after it very heavily. So, but it's just, you know, it's bear flagging right now. That's all it's doing. You can't really expect any immediate results shorting it here. And it did hit my short-term price target. So that's where I cover a pile of it. And on the rally here, I get short the stock again. And it comes in. Now we'll see what happens. I don't know. Maybe I don't end up making money on this piece. Maybe I do. But it's set up the other day on the rally on Wednesday. And it's just punching around this bear flag. So if Santa shows up, it seems like the big names is where the money goes. Gilead, FB, BABA. I would say that's probably true. I would be looking at BABA as one of my primary buy targets. I don't know about this cyber, though. I didn't really care much for this move. I think it should have held in tighter. You got any take on this one, Dr. K?
Yeah, it's pretty sloppy. I mean, it did undercut the low of the gap up, and right. I mean, I like the story, but right now I don't like the pattern. So it's gotta calm down a bit and then issue a pocket pivot. Then it might be legit.
Yeah, and that's a ways from playing in. You know, another one I think they probably go after is Palo Alto Networks, hovering around the 10-day. So yeah, I'd be keeping an eye on those names as stocks to be playing on the long side of the market turns. So when you say you are 250% short, sometimes intraday, yeah, I'll get as short as I can on an intraday basis. Yesterday worked pretty well. SWR holding in there pretty well, someone says. Yeah, it is. I don't know. It's kind of up there. You might think about taking a profit if it breaks the 10-day. I don't know, but it's holding up okay. Do you mean 250% short of your entire? Yeah, that's what I mean. What else would I mean? No, 250% of the money I have in my wallet right now. So, let's see. Any other questions? We got about 9 minutes left. You know, although we could cut it short, I don't really see anything. You know, a couple things to short maybe. For the most part, I just think I'm sitting on the short side with some of my names and letting things play out, and we'll just see what happens here. So. But of course I have a huge amount of cushion. Is the importance of the 20-day moving average part of the new book? Yeah, I also think it was in chapter 6 of the first book that we did. But yeah, I go through all the mechanics in detail of shorting, and also I try to illustrate how things don't always work perfectly, and you do kind of have to work stocks on the short side. Sometimes you may get stopped out real quick, and they may move up to another moving average. But the 20-day, once something is breaking down and it starts to work really well, the 20-day seems to be an area that, or a moving average that is very significant. Also, like I was pointing out with LinkedIn, on a late-stage failed base, generally what you'll see happen first is the stock will break the 20-day. So it does that first, and then it'll go through the 50-day. But the 50-day is too obvious, and then it bounces off there, and then a rally up into the 20-day becomes your stop. Now, if we look at Facebook, you could have played that the same way. You see the breakdown here, but in this case, the 50-day is above the 20-day. So it's a little bit different. In my view, it's probably better if you have a name where the 20-day is much higher than the 50-day, and then that sets up a zone where you can come after the stock on the short side. Here, this one, I just think they're piling into that because it gets a bid because money's got to go in somewhere and hide, and I guess they figure Facebook is the place to be. I don't think Twitter is, although it's probably being held up because of the fact that Facebook is being pushed as well, and they're going after LinkedIn a little bit today too. So, in my view, those are just setting up to be shorted. So, wet F. Whoops. Wisdom tree. Do I like it? Why would I like it? That's like a big pod type formation. So, I don't know. Looks like garbage to me. Okay, what else? Short slash. Oh, so short. Well, I don't see why you would short it. It trades, what, 2.9 million shares to the 48. It's not a big leading stock. I wouldn't really short it. So, Hubs. What is Hubs? HubSpot. That's not something to short either. I don't really see what that's doing, but it's just kind of in no man's land. But it really wasn't a hot IPO. Oh, Bita was another one that we talked about as a short last week, and you can see that basically is broken down. You do, I don't know, you do find some support along the lows here, but I still think it's headed below this low and heading for the 200-day moving average. Is cost too early to short after NAS revert cost? Is it too early to short? Well, you have a break through the 20-day moving average. That could tell you it's you know, failing here and it's going to head lower, and so you could come after it on that basis. Just not sure if you're going to get, if that's really the type of stock to short, but maybe it is. I don't know. If you wanted to trade this, then you would use a 20-day at 139.93 as your stop, and that's less than 1% higher from where it is now. So if you want to try shorter here, I suppose you could. Anyways, that's all I've got. I really want to get back to my trading. To tell you the truth, I see some stuff getting into juicy spots here, and I want to act on some of that since I do have a fair bit of buying power left on the day, since I'm only 250% in and not 400. That's really all I got. You got anything else to add, Dr. K?
I think we're good on my side.
All right. Well, have fun in Cape Town. Great place. And someday that's on my bucket list of places to go. But and the rest of you have a fun trading day.
It's great.
Yeah, and watch how this market acts as the indexes, S&P gets closer to the 50-day, the Dow gets closer to the 50-day, and see what happens here. So, anyways, thanks for showing up. You guys will catch you next time.
So long, everyone.